Hello and welcome back to another video, and on today's video we're going to be doing my analysis for Nebius stock and their 2025 Q1 earnings report. And just before we get into this video, I'd like to thank everybody for their continued support, and my way to show some appreciation back: for every 100 subscribers we have all the way up into 2,000 subscribers, I will be giving £100 back for each mark hit. And the way we'll do that is we'll drag all the people who are commenting on the videos and chuck them into a prize picker, and that's how we'll do it on each one. So if you do want to be in a chance with maybe even starting your own first portfolio, leave a like, comment and subscribe to the channel. Let's get into the video. So let's get into it. The way we're going to do this is we're going to break this down to three sections. We're going to do it into the presentation that I've made, we're going to do it into the shareholder letter, and we're going to do it into the webcast. So we're going to run through my slide first. And for people who don't know, who is Nebius? Nebius is an AI native cloud company focused on large scale compute, sovereign infrastructure and LLM deployment. Their headquarters are in Netherlands. They're positioned perfectly for EU enterprise and regulatory advantage. Founded by Arcady, I'm not saying his second name, can't pronounce it. He is the ex-Yandex CEO, which we'll get into shortly. He's got a deep cloud AI and background. He's vertically integrated across cloud compute, which is the Nebius platform, the data labeling and the evaluation, which is Toloka, the LLM tuning and hosting, which is the AI Studio /1010, and he's got the autonomous driving tech, which is Avride, and a data analytics engine, which is their stake in ClickHouse, which we'll also come back to. Nebius is building the backbone of Europe's AI infrastructure. So first things first, when you invest in any company, who are you investing in? So the man behind Nebius, Arcady, he's the founder and CEO of Nebius Group. He previously co-founded and scaled Yandex, which is Russia's Google, to a multi-billion-dollar tech empire. He's now based in Amsterdam because he left Yandex after publicly condemning Russia's invasion on Ukraine. Now leading Nebius with a vision of sovereign AI infrastructure built outside of Russia. His leadership styles is technical and visionary. He's not just a CEO, but he's actually an engineer, so he knows what he's on about, knows what he's doing, and he's an innovator. He loves putting his money where his mouth is. He's focused on owning the full AI stack: hardware, data, training, and deployment. He's known for betting big on infrastructure and building platforms, not just tools. Yandex was sold at a discounted price of 5.3 billion. Now this was going through when everything was being locked down, everything that was happening on Russia and stuff. So it was sold at 5.3 billion. That's a lot of money still to put where your mouth is talking. So that's a little bit who is Nebius and who's the man behind it. So without that, let's get into the shareholder letter. So next we're going to go into the shareholders letter that was released by Nebius today. So let's get into this. So fellow shareholders, Nebius Group has had a very strong start to the year. Our core infrastructure business delivered annualized run rate revenue (ARR) as of end of Q1 of $249 million, up 684% year over year. We have continued to see strong dynamics in Q2, with April ARR of approximately $310 million. That's a growth of like 60 million, crazy, and have maintained this strong momentum into May. This demonstrates the strength of our business model and our ability to scale up rapidly. This is money that they're investing into their own infrastructures, into their data centers, into everything. I mean, they're aiming to put in nearly $1 billion this year, which is absolutely crazy. We believe our value proposition is unique. The depth of our technology expertise is a significant differentiator against other neoclouds. Nebius builds full stack vertically integrated AI infrastructure, going far beyond bare metal services, with a broad set of solutions to meet our customers' AI needs. This allows us to serve a diverse range of customers, from AI narrative tech startups today to growing numbers of large enterprise customers in the future. So they're all about growth, all about the startups. That's absolutely fantastic. We are rapidly expanding our capacity footprint. In just 3 quarters, we've gone from 1 location in Finland to 5 locations across Europe, the US, and now the Middle East. We are actively exploring new sites in the US and around the world, and we expect to provide more news on this soon. This is in the slides, so we'll go over that a little bit, but that is crazy footprint improvement. That's going from like 1 location to what, 5 new locations in just 3 quarters. That's a lot. We are on track to achieve 750 million to 1 billion in annualized run rate revenue by the end of this year, and in second half of this year we expect Nebius Group to turn adjusted EBITDA positive in the medium term. Our base case expectations are to achieve billions of dollars in revenue with adjusted EBIT margins in the 20-30% range, assuming a conservative depreciation schedule of 4 years. Delivering on our rapid growth plans, we continue to require considerable investment. In this respect, we have been in this uniquely favourable position to fund our growth since we formally launched Nebius last July. We started with a significant amount of capital, 2.5 billion from our divestment, and raised an additional 700 million from top tier investors in December, giving us more than 3 billion in cash. By the way, these guys cash, they have no debt or next to no debt. No doubt on that. And they were sitting with 2.5 billion on their balance sheet last year towards the end of the year, which is nuts. By the way, the cash at the end have only got 1.5 billion, which means that they've been investing heavy. Looking ahead, we plan to fund our growth in part of tapping into our non-core business and equity stakes. We are not aware of any other company in our sector that can raise potential billions of dollars in this way. The reason to say this, which I think is great to take away, is that means they don't plan on building up debt. They plan that if they want to get more cash and invest in it, they're going to start building some of the assets that they already own. And some of the assets they own is crazy. Some of them is worth mega, which we're going to go into. The value of our minority stake in ClickHouse is substantial, and we believe it is continued to grow. Should ClickHouse have a liquidity event in the near to mid-term, this will provide us with significant capital invest in our core business. Now, not many people know this, but something came out recently. So they own 28% in ClickHouse and have just about to do a funding round, or just have done a funding round, which is happening. We're in the cycle of doing that, and it's going to be worth 6 billion, 28% of 6 billion. We'll come back to that. We believe Toloka has a potential for strong future growth, given its recent funding round with a high caliber investors, including Bezos Expeditions and that. The CTO of Shopify. We retain a significant major economic stake in the business. Now, this was somebody that Toloka was something they had on their balance sheet, which was their business, which they did, again, a funding round for, which we'll get back into. They're still a major investor, but it's not going to be on the balance sheet because it's quote unquote a separate business now. So that's something that'll be coming away from it. Additionally, Avride is building autonomous technology that can be strategically valuable to many companies. We are actively exploring strategic investments and partnerships to help accelerate its growth. This is another cool one, which we'll come back to. As we have minimal debt, we will be up to opportunity in tapping capital markets for more traditional types of financing, while seeking to minimise dilution to our shareholders and to be prudent with respect to any future debt load. Given our mid-term growth prospects fueled by our lower cost of capital funding opportunities and coupled with our relative stable cost structure, we see a clear path to building a high growth business with a strong margin profile that can generate solid, sustainable free cash flows. This opportunity ahead of us is immense, and we have the technology, talent and funding flexibility to successfully capture it. So that is the shareholder letter, and there's a lot to take away from there. So all this stuff is available from their site, but I'm happy to drop these in a link in the description anyway for everything that I've circled if people want to come back to it. But some great things to take from there. So let's get to the webcast slides because there's a lot more information in there as well. So next up, we've got the webcast slides. So I did try and get on the earnings call, but apparently it was full, which I've never experienced before. So that one's a new one for me. So here we've got the guys who are in charge of the business. We've got Arcady and obviously his top chiefs and MVPs and stuff like that. So Nebius Group has delivered a strong Q1. Strong Q1 financial performance. Q1 revenue is 55.3 million, which is up 385% year on year since Q1 24. That's crazy. ARR is 249 million, which is up 684% year on year. And the cash is 1.4 billion on the balance sheet at the end of Q1 25, which was 2.5 billion at the end of last year. So that means they've invested heavy, which is good to see. New data center capacity. So obviously 3 out of the 5 locations we're talking about, which is Iceland, Kansas City and New Jersey. They've got partnerships with Nvidia and Meta. And they've got strong engineering capability, same tier as Azure, which is Meta's, which is great to see, and ahead of other hyperscalers. Good things to read, isn't it? That's what you want to see. AI cloud feature enhancements. So you've got the compute, the storage, the platform, the cluster managements, stuff like that they've got the enhancements on. The Nebius ecosystem partners. So it's worth mentioning before we go any further that Nvidia's data center growth is 575x, which is now 115 billion, which we've got a chart here. Nebius among the first AI clouds to offer the new Nvidia Blackwell Ultra AI factory platform. Nebius joined the Nvidia Dynamo ecosystems on open source interface, serving framework designed to deploy generative AI across large-scale distributed environments. Nebius named a reference platform Nvidia Cloud Partner, one of only a handful of companies globally hold this status, which is huge. That's huge. So I did some digging, like I say, you'll see notes dotted around on page and stuff. That's my own research. So in 2023, they had 10 clients. 2024, they had 40 plus clients. Where are they going to be at the end of 25? How many clients will they have? But on a growth rate of what they're at, it's going to be huge. So the ARR dynamic in December 24, there was at 90 mil. In March 25, they were at 250 mil. In April, they're at 310 mil. And by December 25, they expect to be at 750 mil to 1 billion at ARR dynamics. That's nuts. That's so much money. That's being filtered into the business, into the infrastructure and stuff like that. So the guidance for 2025, their group revenue was 500 to 700 million. For the full year of 2024, it's worth adding, by the way, that their group revenue was 117.5 million. That's a lot bigger growth. The annual recurring revenue, the core of the AI segment, ARR, was 750 million to 1 billion. Again, like they try to say, that's what they're putting in. They plan on reaching positive adjusted EBITDA as well by the end of this year, but in the second quarter of this year, which again is great news for investors. Rightio. So this was took from the shareholder letter. We're on track to reach 750 million to 1 billion in annualized run rate revenue by year end. In the second half of the year, we expect Nebius Group to turn adjusted EBITDA positive. Over the medium term, our base case anticipation revenue in the multi-billion-dollar range with adjusted EBITDA margins of 20 to 30%, assuming a conservative 4-year depreciation schedule. What this means in short form is we're being cautious in how fast we're writing down our assets, so our profit margins are solid, even with higher yearly costs built in. Profit matters. So obviously, negative 2024 EBITDA, negative 2025 so far, but by the end of the year, they expect to be 20-30% positive on their margins and stuff. So that is crazy. That's good to see. So this next section, we're going to start going into the significant potential embedded in differentiated software focus coupled with unique funding strength. So it's worth mentioning that these guys, so we're going to go with ClickHouse first, because that's what we're going to pick up on this. They own 28% in ClickHouse. Now, 28% of 6 billion, which by the way, reported valuation of 6 billion in the latest proposed funding round, is 1.68 billion. That's just an asset that they could sell, they can get their money back out of. That's more money that they could use, which is what they were trying to mention in the shareholder letter. Not using debt, using their own assets to pump money back into their own company. That's massive. 1.68 billion just sitting there in another company, 28%, that's a huge percentage of something as well. Toloka is a data solution business backed by Bezos Expeditions and the CTO of Shopify. Now, they did a funding round for this, which was 72 million, and both of these guys ended up buying a big proportion. So Toloka will be coming off, which is on the next slide there, coming off of the sheet as a business, and it'll be more as an asset, just like they're owning shares in a different business, because they lost the majority voting of that. Mikhail, I'm going to say his name is newly formed board of directors, so he's on the board of directors there now as well, so he's got to hold a big position. None of their actual positions were released, neither was Bezos' position, in which their company do, but these two are massive people that put into the 72 million funding, so they've obviously got big spends in there now. And you've got the Avride, one of the leading autonomous technology developers with strong partnership, including Uber, Hyundai, and Grubhub. By the way, Nebius own this outright. That's not anybody else that are in there. So these guys own this, which we're going to go into now. So according to Nebius' recent 20F filing, the company is actively seeking third-party investments into Avride, indicating potential future changes to its ownership structure. So again, could be just like Toloka. If they do plan on doing a funding round for this, they might lose majority in it. It'll become an asset other than part of the company. But again, more money coming onto the balance sheet for other stuff. Now, these Avrides, I don't know if you've ever seen them, but I'll pop a picture here right now so you can see it. They're pretty cool. Little robots, self-driving cars, all that type of stuff. So they're mainly based in Austin, Texas at the moment, and Dallas and Jersey City. I've seen it on one of the YouTube videos that I was watching. I've seen this little robot driving down the street, which is absolutely crazy because we don't have stuff like that here in the UK. It'd be cool to see, but they'll probably get nicked. So they're testing their operation in USA, South Korea, and Japan. The R&D hubs and offices are in Europe, Israel, and South Korea. Now, this was mad for me when I read this. They do up to 1,200 plus deliveries daily, made with Avride robots at the Ohio State University. That's crazy amount of deliveries to one place. And again, these are used in Austin, Dallas, Jersey City, Tokyo, and that's through the Uber Eats. So Uber Eats are using it because they've got key partnerships. So the key partnerships with Uber, with Hyundai, Uber Eats, Grubhub. So multi-year strategic partnership with robo-taxis to be launched in Dallas this year. So that's their self-driving taxis and stuff. So these guys, that's a massive thing to come, having that on your balance sheet as well. And to look at the next key data partner for the AI ecosystems. So positioning to address a significant demand to the AI data with unmatched quality and scale. So, like I say, having Bezos and stuff investing into your company, and you've got Nvidia on there and stuff like that. These are all the type of people that if these guys are buying it up, it's going to be somewhere that's going to be fantastic. I mean, I got a lot from these slides, a lot from the show, a lot of film with absolute confidence we're going into this stock. So the last one that I want to go over is my evaluation of where I see this company going, where I think it'll go. So we'll get right into that now. So we'll go back to my presentation, back to my slide. So referencing back to the shareholder letter, which I will pop right here again. The outstanding shares is 238.11 million. So the current market cap at recording of this video is 9.45 billion. And the implied share price is about 39.5. Obviously up and down markets, a little bit open still, so that's it. So the 2024 ARR was 170 million, and the 2025 ARR target is 500 million to 1 billion, which obviously we've seen across our slides. So scenarios: bear case, they go back down to an implied value of 5 billion, and a target price then would be 20.99, which would be a downside of 46.9%. With their assets that they've got, the stuff like that, very unlikely that's going to happen. Base case, which we're very, very close to already, we're not even that far off it. We're looking 11.25 billion at target price of 47.26, which would give us another 19.6% growth. And it is worth mentioning as well, because it's easy to see people see earnings and it drop and then panic. It's up 70% or just over, which is here again for this month. 1 month. Nuts. No, bull case, which I'm very optimistic for by the end of the year, or maybe even just a little bit after, but I'm optimistic for this. 20 billion valuation, target price 83.99, which is 112.6% growth. There is no reason why this can't get there. Well, guys, if you did find this video informative, or you did find it any help at all, and don't forget about the every 100 subs that we reach, we're going to be giving away £100, whether that could be your start to your own investment journey, or it could be an Amazon voucher, whichever way you see it. If you did like this video, please leave it a like, a comment, subscribe. Let me know how you found this video and if you'd like more like this in the future.